The Inland Revenue Board has failed in its 1.8 billion tax claim for the year 2018 against national power provider Tenaga Nasional. This follows the High Court here allowing TNB's judicial review application to challenge the tax imposed, as the court agreed that the sum is considered reinvestment allowance. This is considered a landmark decision as it may have a favourable impact on the other ongoing tax appeals lodged by the national utility company. It is understood that this is in relation to its RA for the earlier years of assessment 2003 to 2007 and 2009 to 2017, which amounts to 5.8 billion in additional taxes and refund. TNB was seeking to quash the IRB decision dated July 13, 2020 to impose a sum of 1.812 billion as additional assessment, as it disallowed the group's contention that it was a claim for RA. IRB had argued that TNB is not entitled to the RA as it is classified as not in the business of manufacturing electricity and that TNB is just a service provider. Justice Datuk Nurin Badarudin, who made the decision, disagreed and was in the view that TNB's business relates to manufacturing of electrical energy or that the generation of electricity is a manufacturing activity. Justice Nurin also ordered IRB to pay 5,000 ringgit costs to TNB. The National Recovery Council has agreed for Malaysia's international borders to be fully reopened from as early as March 1, 2022 without compulsory COVID-19 quarantine, said Chairman Tan Sri Muhyiddin Yassin. However, COVID-19 screening tests would have to be conducted in accordance with Ministry of Health requirements for both departure and arrivals. He goes on to say that the reopening of national borders must be implemented strategically and based on concurrent assessment of risks. The NRC's decision followed a meeting on Tuesday, which saw the Council reviewing the proposal for national border reopening by Immigration Department Director General Datuk Sri Khairul Zaimi Daud. According to the statement, Malaysia is among the countries with the highest percentage of completed vaccination against COVID-19 in the world, with 98% of the adult population and over 78% of its national population having received complete doses. More than 50% of the adult population have also received their booster dose, while the administration of booster shots and vaccines for adolescents and children will be increased after taking into account the emergence of the Omicron variant. 1MDB and its 4 subsidiaries have on Tuesday obtained an ex parte Mareva injunction from the High Court against Datuk Sri Najib Razak or his agents, freezing his assets in relation to their $681 million claim against the former PM. The Mareva injunction against Najib allows him to withdraw up to 100,000 ringgit monthly from his bank accounts. The EdgeMarkets.com is given to understand that the Mareva injunction applies worldwide and only to the Pekan MP, even though other former directors and board of advisors are also named in the 1MDB suit. The injunction is to prevent the dissipation of the $681 million claimed against Najib and several others. A Mareva injunction is a court order that effectively freezes the assets of the person where legal action is before the court and prevents the transfer of assets that may include money held in banks or financial institutions. Following Tuesday's ex parte Mareva injunction, the court fixed February 21st to hear Najib should he contest the injunction. Court documents cited by the EdgeMarkets.com reveal that Najib's conviction in the SRC International case was one of the reasons that prompted 1MDB to apply for the Mareva injunction. YTL Power International is disposing of its entire 33.5% equity interest in Australia's Electronet for 1.03 billion Aussie dollars as the group looks to realise gains from the investment, which was acquired over 2 decades ago. In a filing with the Bourse, YTL Power said its wholly owned indirect subsidiary, YTL Power Investments, had entered into a share purchase agreement with Australian Utilities for the sale. It said the sale consideration represents a premium of approximately 767.84 million Aussie dollars to the carrying value of the investment in Electronet of 258.16 million Aussie dollars based on YTL Power's audited accounts for FY21. Upon completion of the proposed disposal, the group will recognise a gain of approximately 2.21 billion ringgit based on the carrying value of the investment as at January 30th, 2021. The divestment contributes a 16.8% boost to YTL Power's pro forma net assets per share, with the value increasing equating to approximately RM1.88 per share upon completion of the disposal compared to RM1.61 for FY21. In a statement, Group MD Dato' Yeo Seok Hong said the timing for divestment proved optimal in light of the attractive valuation of regulated utility assets and strong investor interest. He adds that it allows YTL Power to optimize the balance of assets in its portfolio and increase the flexibility to deploy its cash reserves towards viable new ventures such as solar and other renewables. ElectraNet operates the high-voltage electricity transmission system throughout South Australia under a 200-year exclusive lease granted by the Government of South Australia. YTL Power had acquired the 33.5% stake in December 2000, and it was the company's first foray overseas, building on its experience as the country's first independent power producer. Tenaga Holdings saw a 75% drop in net profit to 259.06 million for its third quarter of FY22 compared to the 1 billion posted a year ago. It should be noted that last year was an extraordinary year following a record-breaking run of higher average selling prices for its gloves throughout the pandemic. Revenue for the quarter also declined 53% year-on-year to 1.01 billion due to the normalization of ASP and sales volume as demand dipped amid an increase in supply by major and new glove entrants. Tenaga also declared a second interim dividend of 14.8 cent per share, which brings cumulative dividends to 69.75 cent, a 54.15 cent improvement from the same time last year. In a statement, CEO Kwan Moon Leong said that ASP for its gloves has continued to decline from its peak in the first half of FY22 as sales demand dropped and supply increased. He says in addition, buyers have also continued to adjust inventories as a result of the lower selling price. Kwan says that the recently gazetted one-off prosperity tax is expected to have a material impact on earnings in the final quarter of Tenaga's current financial year. He says that Tenaga would continue to focus on its strategic long-term expansion plans to cater for the structural organic step-up in global demand for gloves, as glove usage is set to see an uptick in emerging markets on the back of growing hygiene awareness. As such, he says Tenaga will continue to expand its capacity, driven by its next-generation integrated glove manufacturing complex. In addition to its 6 plants at the NGC, Plant 7 will have an annual installed capacity of 2.6 billion pieces once it is fully commissioned. The construction of Tenaga's NGC 1.5 expansion is also currently underway, with the first line targeted to be commissioned by October 22nd. He said that upon NGC 1.5's completion over the next 3 to 4 years, Tenaga will have an increased annual installed capacity of 63 billion pieces per annum.